So I'm going to go ahead and get started. My name is Brittany Westware. Of course, I'm the Regional Manager for MBE Services for the MPMSDC. And so we're going to get ready to get ready for a Power Perk workshop. Of course, this is Bid Ready and Bid Smart, and it's brought to you in part by NREL. Cynthia Heron is the owner of Heron Consulting Benefits and Investments. She has been working with her team for over 25 years, and with her team, she builds and practices. I'm sorry, that is not at all what I'm supposed to say. Let's begin again. Over 25 years, Cynthia has worked with the team to build a practice based upon client relationship development, and the accumulation of assets under management is the goal. However, as an investment advisor representative, the cornerstone of her practice is using investment education and investment technology to address the learning curve and the investments needs of her clients. Theodis Watson started the Central Bank of the Midwest in 2018. He has close to 20 years of banking, with the last few years focused on commercial lending. Theodis is a Missouri State University graduate and has his MBA. He previously worked at Commerce Bank, where he managed various locations from small in-store to the most prominent and profitable branches in the company. Theodis has led the United Way Committee, served and led Diversity and Inclusion Committee, and has participated in a number of leadership programs. Theodis serves on a number of nonprofit boards in the Kansas City metropolitan area. And outside of simply being an underwriter, producer, and agency owner, Casey Parasoff has held every officer position with the Surety Association of Kansas City, including president in 2016. In 2017, Casey was also named one of the rainmakers in the industry by Ingram's Magazine. This is only awarded to the highest producing agents in the metro area. In 2019, Casey sold his interest in his agency, and at the same time was presented an opportunity from Powers Insurance and Risk Management that he could not pass up. He will now head up Powers Construction Division as their National Director of Construction Services. Please join me in welcoming Cynthia Heron, Theodis Watson, and Casey Parasoff. So we're going to go ahead and get started. Hello, welcome, welcome. We can see everyone. So let me go ahead and share my screen. All right.
Hello, Brittany. Is Cynthia on? I don't see her name here.
Let me check. Give me 1 second.
Wonderful introductions, by the way, Brittany. Thank you.
Of course,
much better than what I would have done.
People. Let me see if I can get Cynthia one time.
And while we're getting started, and Casey and I can try to fumble through this, while we have our fearless leaders who is not on. But yeah, no, we appreciate you all joining and attending this event. Casey and I are here to support. And what we are here to do is we're not trying to sell you anything on the services. What we're trying to do is really show you and provide resources that what our team can do to really kind of help your business get opportunities with the bid projects and bid smart, as we mentioned before, and also provide resources. And so we are a team that is here to support not only the businesses, but also a team that support the procurement officers. And so we are here to provide resources. Again, I am in the financial service industry. Casey does the bidding, the bonding and insurance. And Miss Cynthia also helps with insurance, but also provides you for a long-term approach with our goal is to really find ways to help create future generation wealth and position businesses with the opportunity to grow. So there she is, Cynthia Heron. Welcome.
Apparently I was in another breakout room and I couldn't get out.
I had to move you. My apologies. I was like, where is she at? So I had to go to the other room and move you. So my apologies for the technical difficulties. But we could celebrate you one more time. I could do a quick reintroduction of our fantastic Cynthia Herron. So we're going to go ahead and get started. She, of course, is the owner of Herron Consulting Benefits and Investments. And of course, for over 25 years, she's worked with her team to build a practice based on client relationship development. And we all know that that is very key. That development of those clients is one of those key aspects that we know. So accumulation of assets under management is the goal. However, as an investment advisor representative, the cornerstone of Cynthia's practice is using investment education and investment technology to address the learning curve and the investment needs of her clients. So I'm going to share my screen, and without further ado, the next voices you all will hear are from Cynthia Herron, Theovis Watson, and Casey Pearson.
Okay.
Thanks, Brittany.
Again, sorry for the delay there. It was a little bit Twilight Zone. I was going, oh my God.
No worries.
Okay. All righty. So thank you very much, Brittany, for the introductions, and we're looking forward to this being a very interactive experience. And before I get started, I want to let you know that if you're going to hopefully get from my approach and from Casey's approach and from Theodore's approach, this is urgent, what we're getting ready to share with you, because there's going to be a significant amount of federal dollars coming down the pike. And what an important aspect is the opportunity for bid-ready minority firms to fully engage in this new opportunity. So keep that in the back of your minds as we go through this presentation. So I need control of the screen, okay?
Sure, give me 1 second.
Okay, so who are Contract Resource Partners? We are a team of companies developing long-term relationships with sub and general contractors to help pursue the billions, that should be trillions, in contracts that's going to be in this region. We do not charge a fee for our support. Our logic is, if we help you become more productive and a stronger subcontractor, you in turn eventually will hire us for our respective services. This approach, I feel, is unique because what we're trying to do is make sure that your success is our success. So we want to make sure that you're comfortable with your growth process, how we contribute to your growth process. Now, there are a lot of great resources out there, but we're not geared for startup. There are other groups out there that are more geared for startup than for Contract Resource Partners. That's why we work hand in hand with AllCap, Justine Peterson, Casey Biscayne, PTEC, all these great organizations to help firms start up. We're more interested in the firms that already are established and want to look at the next growth process for their companies. So, again, why is there urgency to be bid ready? Well, first of all, the most recently passed American Rescue Plan, and by the way, there are so many names for this big pocket of money. It's interesting, but I'll call it the American Rescue Plan. And as you know, that consists of $1.9 trillion, with $20 billion going toward restaurants, $23 billion going toward the airline industry, $1 billion for eligible contractors, $8 billion specifically for airports, $1.25 billion for shorter venue operators such as music venue, things of that nature. And also, what I do know is this: for the state of Kansas, beginning this month, $3 billion is going to be going to 105 counties and 600 cities. That's what we know about. Now, with the law that's hopefully being finalized as we speak, the ink is not dry, the $2 trillion American Jobs Act consists of $115 billion to repair roads, bridges, highways, $100 billion to expand high-speed broadband access across the entire country, $100 billion upgrade and build new schools, $100 billion to expand and improve power lines, spur a shift to clean energy, $174 billion spending on boosting the electrical vehicle market. Here's the most important one, guys: $20 billion going to reconnect urban neighborhoods to were cut up and bulldozed by blighted highway projects in the past. To me, this is an important feature because that smacks of local money and local development and local control. So what we know so far is for successful bid collaboration, there's going to be large companies going after larger bids. But guess what? This is federal money. And the opportunity exists in the following, that they must have a strong minority participation partnership to secure more money for their bids. I also learned, again, nothing official yet, that when states, compete for this money, that they'll probably get more money because the federal dollar is going to be doing dollar for dollar matching for these entities that have minority participation involved. So the minority participating company will have finally some degree of leverage if you're ready and if you're in the game. So again, it is assumed federal dollars will have participation requirements. If a large company wants stronger access to bids, they must form an alliance with a certified bid-ready company. For the first time ever, this is going to be a strong factor. Now, what are the growth processes? Well, got to be established and certified. Okay, you have a larger bond relationship for required performance and property and casualty insurance, expanding your banking relationships, and also have a stronger benefit package, because right now, a experienced employee is going to be a hot commodity and you need to be able to retain them in your company. So our group, Contract Resource Partners, has divided up into these main areas for banking, bonds, and benefits and beds. Now, if you're a client of mine, you know the following. This is a requirement that you must engage in some form of giggle. So here's my first giggle for today. And Brittany, I can't hear the giggles, so I'm assuming that people are laughing a lot. Thank you. Thank you for the sound effects. I do appreciate that. All right. First, we're going to begin with Casey Parasoff, and he gave us a brief introduction earlier. But one thing to say about Casey is, what I like about his style is that he recognized not everyone is comfortable with the bond conversation. And most bond brokers expect you to know everything. So what Casey's style is, he makes sure that the base knowledge is there. Then you engage in what are you going to your particular needs. So Casey, let's go and go for your presentation here.
Yeah, thank you, Cynthia. Welcome, everyone. I'm excited to be here. We're certainly, at an exciting time in our industry, just in general, with the amount of work that's on the horizon. And, it's a situation where I feel like we haven't seen anything like it to this date. Okay, can you go to the next slide, Cynthia? Yeah, so this is just a little bit more background about me. The introduction was so great that I don't really feel like I need to say any more. Just know that, this has kind of been the only thing I've ever done in my adult career. And I'm very passionate about the bond and insurance industry for the pure fact that, you get to see companies either write them their first bond ever, or just watch the growth from inception to their executed plan. It's a very rewarding career, and I think, and I hope that if we ever get a chance to work together, you'll kind of see that in the way that I operate. My passion tends to come out, which means that I sometimes jump around. So if I get a little bit off track, I apologize in advance. But yeah, so, my clients kind of range from, startups to all the way to multi-generational companies doing 500 million a year in revenue with 15,000 employees on a nationwide basis. Typically in the industry, obviously, is construction, but anything from vertical builders to heavy contractors, as well as, artisans, trade contractors, and then suppliers that serve our industry. The overwhelming majority of the client base works for the government, whether that's at the state, the federal, or municipal level. Thank you. So really, just a little bit more about our firm. Our goal is to help our clients become better business owners in general. We do it through first finding a firm understanding of your business and its unique goals, and as well as the obstacles that your team faces, when going down the path and obtaining those goals. Once we have that comprehensive understanding of your business, we'll structure the bond program that will help bring the company across the finish line, along with the right insurance program that mitigates the risk along the way. We feel our competitive advantage is not just our ability to build a better mousetrap as far as your bonds and your insurance program goes, but really kind of being that, positive problem solver for our clients. So whether it's, a need for a competent professional service provider, or just a simple introduction to a GC sub or supplier that's a like-minded business owner. We kind of feel like if you can make introductions to like-minded quality business owners, that everyone wins. So we offer traditional guaranteed cost insurance programs through various carriers, and we have, a handful of non-traditional markets for the larger, or non-traditional programs for larger contractors, whether that's a self-insured retention or captive insurance programs. So every business, is unique, and it carries its own unique set of obstacles. And so, once we get an understanding of what yours are, we can kind of design the program around those unique needs and obstacles. So there's several things that we can do along the way from a best practices standpoint on your property and casualty program, whether that's helping with compliance or loss mitigation, putting together a written safety program for all of your employees, a safe driving program, return to work programs. The goal is to maintain control over the total cost of your risk management program. And then, I was raised in a blue collar family, and the old roll up your sleeves and go to work is just kind of instilled into me. So, one of the things that I kind of hang my hat on is that when others say no, I'm going to roll up my sleeves and go to work and find a way to say yes to your plan and to putting the bond program in place to get you there. So these are just kind of some more, highlights about me. And Cynthia, I'm not sure that my slides have been updated, because I wanted to provide some of the pointers for, preparing for the growth. And I think these are from last slides, but that's fine. I guess, I will just kind of wrap it up here then. So yeah, I'd love to help. There's different ways and things that we can sit down and discuss. Some of them are immediate type of things that your company can implement, whether that's upgrading your financial presentation and year-end statement. I would say that if you're going to be going after some of this bonded work that's on the horizon with the new infrastructure bill, the first thing that I would do is go out and get a qualified CPA to prepare a review quality statement for you. The reason I say that is that if you want to actively bid jobs over $1 million, the surety industry is going to require a CPA review. And so that's something that you can do right now and kind of work the kinks and bugs out that you might experience in upgrading your financial presentation, because you don't want to do that while you're, staring at, an opportunity that may be your second largest job today, or a job that's twice as large as anything you've done to date. You don't want to also compound that hurdle with a need for an upgrade in the financial presentation. So the little things that you can do right now, I'd love to talk to you about, and so that those aren't additional hurdles when the time comes for bid day. Thank you, guys.
Perfect. Thank you so much, Casey. If you guys don't mind, I'm going to hold questions till the end to continue on with the presentations.
Okay. So next we're going to Theodore Watson. with Central Bank of the Midwest.
Good evening, everyone. Good morning, everyone. Theodis Watson with Central Bank. I know we have people joining us from all over, but I am based out of Kansas City, Overland Park, Kansas, to be specific. My title is Assistant Vice President, Community Relationships Manager for the bank, and I specialize in all small business, C&I work, and also SBA activities. So again, I'm very excited about being here. Just a little brief statement. I know many of you all, if you have not participated in the PPP program, I truly encourage you all to do that. Contact your bank, but I will give you a brief update. As of Tuesday, right around 4 o'clock, they did cut off the spigot, I would say, for most banks to be able to apply for the PPP program. So they are only opening that for CDFIs and MDI financial institutions, and those are community financial development institutions and are also minority depository institutions who can now continue to provide PPP loans. But I'm just a little bragging page here, which I'm very excited about. I led our team here at the bank from rounds 1 and 2 of the PPP funds. We did, roughly around $264 million in loans, served about 2,409 clients to be exact through the rounds 1 and 2, and then round 3, which we are currently in now. We did help over 100, and right now this by about 103 million. We did $103 million worth of loans since actually January, February. So very excited about that. And again, kudos to all the bankers. And if you have a bank that helped you out, please hug them, send them lunch, because they worked a lot of hours to get you this money. But a little bragging of what the team I've been able to lead. We were number 1 in the state of Missouri, number 1 in Lawrence Market, and number 2 in our Kansas City metro area. So we're very excited about the number of businesses we've been able to support. But nationally, our institution was 66 ranked nationally out of 5,000 lenders. So again, a lot of hard work was going into this. Your bankers, again, they've done a great job of putting this on. And again, I'm very blessed with the numbers we put together. But just a little bragging page there, but a little bit about Central Bank of the Midwest, and we can kind of skip through this, but led 50 branches, roughly around 18 billion in assets, rated number 4 in the best banks in America. So again, we are very, very, very pleased. And so when you are partnering with your bank, you want to make sure that you have a partner as you are going to seek funding for various projects. I just like to brag on our institution because we do a great job in making sure we are making the right deals, underwriting, and being a resource for our clients. So a little bit about the program that we put together, and again, just what we try to do when you are participating in this program. Again, we updated these slides. Unfortunately, they're not updated here, but basically what most banks can do and try to work for you as you are building out, or asking for loans for particular projects is really. And what we do is we really try to find a way to building a program for you. Every loan is different. Every deal is different. So what banks can do is probably structure certain loans to be able to help you get this project. So company A is looking to purchase or to create widgets for a particular contractor or for a firm. If you have a project and you need to come to the bank, the goal is to be as clear and concise about what you are wanting to do, so the bank can either structure that loan, particularly probably like a bridge loan, to help you meet that need. So for an example, you need to make 100 widgets and it's going to cost you X, Y, Z. I encourage you to really make that story clean and concise with the banker, whoever your banker is. Tell them what you're looking to do, have your numbers and your projections in place. So what the bank can do is create a program for your particular deal that will allow you to get the funding that you need and move forward. And central bank obviously are ones who want to build relationships. Your banker want to build relationships, and the goal is to be able to build a solid program, a solid product for you as you go out and seek deals to deal with municipalities or state or federal funds. You can go to the next slide there. So basically, and this is pretty much a project that we're working on, but most banks are very similar. So I think in this group at the Mountain Plains organization, you all are seasoned businesses, which is great. And so basically they look for businesses within 2 to 3 years in business, which makes sense. So startups, not saying that they won't get approved, but sometimes they can be a challenge getting approved, specifically when you are working with financial institutions. Startups sometimes can be challenging, but if you've been in business for 2 to 3 years, most banks will love to talk with you and see how you can help. Basically, we know that there has been a challenge with getting funding for various municipalities. We know it can be upwards of 60, 90 days to get paid. So really, again, telling that story to the banker, what your needs are and how they can structure some type of bridge loan to help you meet that need of your of that particular contract. Normally the loan origination fees can be negotiable. We put $500 here, but they are negotiable with your institution, of course, with us. And so that can be something that's just not an application fee necessarily, but it's an origination fee, which is typically paid once the loan has been approved. You must meet bank underwriting requirements. So there is a underwriting requirement typically that all banks have, and we'll talk a little bit about that, but you want to make sure you have your profit and loss statements up to date, maybe year end or quarter, depending on what your banker is needing. We normally want year end if you haven't completed your tax returns for that particular year, and or a year end or year to date statement saying, hey, where you are currently. So, we're already in May. We're already in May, so first quarter is done. So most banks, and I know we would want to see your first quarter financials just to kind of see where the business is going, how well you're doing. We know that sometimes you may work on a project and you may have a change order, or the project has changed. Again, being communicative to your bank, communicating to ourselves and say, hey, this is what's happening. This is what may cost. This is how I can mitigate that risk. It's very important to be able to communicate that to your banker so they understand and there's no surprises when it comes to underwriting your loan. Credit score criteria. Again, every bank has their minimums, but we typically want a 650 and above. Obviously the higher the better. But again, you really want to make sure your personal affairs are in order. The higher the better, as I mentioned. But just something to keep a close eye on. I know people say, hey, this is a business loan. Why do you need my personal credit? Just remember, you are the personal guarantor, so you will likely be responsible for the notes. And so we are going to look at your personal business to determine how well, how many obligations you have out there, but also how well you've taken care of your affairs to help you meet the minimums. No bankruptcies in the last 7 years, just saying, hey, that's kind of a standard, but not a deal breaker. Again, communicating that message to your banker about what happened is very important, but make sure you have all your other situations taken care of. And in positive note, meaning business is making money, you have a little cash in the bank, those type of things to be able to mitigate that risk. And what we're going to do is evaluate your past two years of cash flows and revenue. So obviously businesses, I'm sure you look at your spreadsheets constantly. So being aware of when your flow is, when you're making money, when business is slow, when you might have slow periods in your business, being very comfortable with that. And also hopefully you're showing some growth in your business. Again, making sure that you are growing in that level. Typically, business account criteria is very standard, but most banks will want you to have some type of obviously established entity, having a bank account when you're doing the loan, making sure you develop that relationship with your institution is very important because obviously banks want to do business with people who they know, and you got deposits in the bank. And so that's something that we obviously strongly encourage. And lastly, this is not required, but this is something that I encourage other businesses, my clients, to do, is establish some type of reserve. So as you are making money, as you are getting a contract, have a stash reserve for the incidentals, because we know things will happen. We know there might be overruns or change orders and things like that. Making the bank feel comfortable with loaning you money based off of this project is very important. So letting them know, hey, I will keep a reserve in your bank to kind of help you meet this goal, to let you know, hey, if I have a slow month, I have this reserve here to help pay the note if there is a need. And then again, that just kind of gives the bank, again, a little more confidence that, hey, we are here to pay our notes back. And the bank is saying, great, I got a good client who understands business. So that is just really what I usually recommend with businesses as we go through a project like this, to really make it comfortable for the bank, make it comfortable for the customer, easy to understand. So CRP, again, in my bank, responsibility is to educate our businesses, let you know what the expectations are, develop a team of resources to assist building a successful business. Again, this is not a one-off. We don't want a one-time deal. We want to grow with you as you grow. And lastly, identify solutions. So that program that you just seen before, we're not really a cookie cutter. Every deal is different. And so we're looking for solutions as a banking institution, and your bank should do that, or credit union should do that, because at the end of the day, we want to make sure the businesses win. We want to make sure the procurement officers win. And ultimately, we want to make sure businesses and money is flowing through our communities. And so again, that's really the role of my bank and CRP, is to find solutions for all parties.
Thank you very much, Theodis. And again, I guess we're holding questions to the end, which is perfect.
Yes.
Okay. Again, give a break, guys. Thank you, Brittany. Appreciate that. All right. Okay, so the next part is The next part is my portion. And again, what I do is I provide investments and benefits for companies, and I have a range of expertise, over 20 years experience. I'm licensed in 8 states, manager of 18 million in assets. But the bottom line is I can handle one person to 1,000 people. But going back to why benefits and employee retention is so important is because can your company compete with large companies who want to attract and retain core employees? Again, I cannot stress this enough. There's going to be a lot of collaboration over the next year, large companies with small companies. So if you're going to be collaborating with a large company, you must have a strong staff to be on that team to pursue larger bids. So you cannot be someone borderline benefits. You must have a strong, retainable, and long-term staff. Also, the pandemic has taught us, do you have reserves and liquidity? If there's going to be a future pandemic, would your company survive that? I hate the fact that pandemic happened, but open our eyes to many, many things that are missing. So if you're a company, these are the core benefits: retirement plan, business insurance, health insurance, and pre and post retirement income planning. Guys, as owners of companies, you have to remember you're the owner and everything is about you, because you must design a plan that meets your particular needs, because it all trickles down from there. But what that does, it tells your employees that you know that you're going to be there for the long haul. One thing that people miss a lot, and a bit of it planning, is key person buy sell insurance. What that means is this: if life throws you a curveball, you must have money coming back to the company to take care of things to keep the company going. If you're a partner and a partner passes away, money must come back to the company to buy out the shares of the surviving spouse. These are all continuation ideas. And most small firms don't look, when I say small firm, I mean firms of fewer than 100 employees, do not look at this. And you know there's horror stories about companies that are great and growing and fantastic, but when the patriarch or the matriarch passes, the company disappears. These are ideas to keep the company going. So when you look at a retirement plan, you must find the right fit, because you, the owner, have got to be in charge. So I recommend looking at 3 different types of plans and see which one fits you, the owner, best. And don't let the vendor or the salesperson try to convince you to do something that you're not comfortable with, because that's what they like to sell. You must figure out first, can you put away 19 grand plus a year for a 401k, or 13 grand for a simple array, or 6 grand for pay with a deduct IRA? Does not matter. We'll find the plan that fits you best. Now, why is that important? Because if you do not have, as an owner, a retirement plan in place. And whoever your transition ideas are, you're going to sell the company or give it to your family or whatever, that if you don't have a retirement plan in place of your own account, and you get down to why your company transitioning, you got to tell the buyer, listen, I got nothing. I will depend on the sale of my company to fund my retirement. The question is, how much power have you given that purchaser of your company? You give them all the power. So you, the owner, more than your employees, must have a plan in place so you can negotiate effectively for your company transition. So another thing too is make sure people understand the importance of what you're doing. So when you have your presentation, make sure your employees know if they do engage in a plan, what the potential would look like of their engaging in a plan. Most vendors don't bother to do this because they assume people know this. Well, they don't. So make sure that whomever you use explains the power of time and the power of their money. And the more they understand that, the more they're going to be loyal to you and stick around to make sure your company grows to a level that is expected to grow. Same thing with a simple array. Simple array is less complicated, less expensive, but the same goals apply. People need to know. It's important for them to be involved in the plan for themselves and for the company growth and the company future. Now, health insurance. I can tell you right now, you got to put a gun to my head to sell health insurance. I am not a fan of health insurance, but it is a needed factor. But here's the trick you need to recognize. As you, the owner, you must design what you think is best for your plan. You got to choose how much you're going to pay for your deductible, the copay, things of these questions of issues. So by you deciding that, you tell the vendor, all right, this is what I want. And you find the right combination of companies to meet my needs. It's recommended strongly that you agree to pay maybe 50% of the employee-only portion of the premium. Share health insurance costs with your staff. They're all adults. They know how complicated health insurance can be. Now, with the new administration, we don't know what's going to happen next. Is it going to be universal health care? We just don't know. But implant with your employees, share the cost so everyone can get coverage. And I kind of recommend this kind of format. You make the vendor break it down into what you feel is important so you can make the appropriate decision. It's been my experience that often with the owner, you get all this data thrown at you and you got to decipher it. Make that vendor, make that a broker, put it in a format that you feel comfortable and can identify with it. Now, here's another trick of the trade you might want to consider. If you're getting in a position to hire new people, or your brand new company getting ready to hire new people, here's what you can possibly do. Let's say you're going to offer an employee $25,000 a year. Don't offer that. Deduct 3% or $750, this for this example, and put in a general ledger account and offer them $24,250. And what you're doing there is you're building into the salary of the employee benefits. So if they choose not to be involved in a retirement plan, I got it. So I got $750 attached to them to offset other expenses. So here's from the very beginning, look at sharing the cost of benefits with your staff if possible. Now, individual consultation. This is sort of like an afterthought, but guess what? It's kind of needed because the more your employees take responsibility for the financial future, the more you are less of the parent with your employees. So you must have an advisor who is engaged in, make sure they know how to take care of their investments and give them the tools to do so. So I recommend 3 different things. You have a 3-portfolio approach. Have enough money, get ready to retire to cover your fixed expenses, which means you have money that's coming from lifetime income sources. Then have money working for you in the market to grow and be, and make sure there's emergency funds. Ideally, the net gain from this should go to liquidity. Now, what I'm doing here is making your employees self-sufficient in their retirement planning. Why is that important? If people don't know their retirement plan future, they may hang on to a company longer than they should, not giving someone the opportunity to grow, and also they may not feel the need to go off and do better things, or they don't see the future of growing with their company. Their retirement knowledge is important for your growth of your company. Now, I can't see you guys, so I don't know if this is the next question, but how many of you guys, if you have kids or grandkids and nieces and nephews, how many of them think that you are their own personal piggy bank? So If that's the case, then you don't want this to happen. But I recommend you have an adult kid fund, so that when people become adults and they want to borrow money from you, you have a fund that does not disrupt your particular retirement lifestyle. Now, guys, portfolio and benefit management, technology. Make sure whomever you choose to work with you, that they make available to your staff and to you the ability for all of your information to be downloaded to one location. What does that do? That makes that employee understand the important services you're providing and the value of your benefits. I cannot tell you the number of times people have said, I have a 401k plan, but I never go online, or I don't know what my health insurance is. Engage in technology that allows them to see at once in one location everything that you're offering. What does this do? This promotes loyalty. Because when someone comes knocking on the door to go after your experienced employee, they kind of know, wait a minute, what am I leaving here? I'm leaving a good plan, an owner of the company who knows me and appreciates me, and there are benefits. Knowledge of benefits is key to retain your employee loyalty. To get an example of flexibility, this is a 3-person plan put together last year. This gentleman had nothing. He was the owner. He had 2 W-2 employees. He had a bunch of 1099 employees. His benefits was no retirement plan, no health insurance, no buy-sell key person, nothing. But for his family, he was paying $1,250 a month for his family. Expensive. So we put in place the following. We put in place for him to have a simple RA plan. He's only 36 years old, which means by 70, he may have $2 million in his account. We put in a health insurance plan. 50% was shared with his employees. Everyone could afford it. Then we put in key person buy sell for himself. He wanted the company around to give to his son. So based on that, this 3-person company had a full benefit plan. And that's what he did. And then keep in mind what he was paying prior to that. He was paying $36 less. So right now, he's only paying $36 more for an entire benefit plan. Now remember what he had before. He had before $1,250 a month. Now he's paying a little bit $36 more per month, and he got a full-fledged plan. Now, to be more complicated, an 8-person plan. Same logic applies. We figure out what you want and put it within your time frame and put it within your scheduling. But you, as a small firm or a large firm, can have a competitive benefit plan. And what's different is what large firms don't have is the opportunity for the employees to know you, appreciate you, and form a bond that's sometimes not available. So experienced employees are and will be in high demand over the next year. So the thing you got to remember, people are going to be competing for your people. So remember, make sure your company can handle the curveball. Make sure you have a plan that fits your particular needs for retirement income purposes. Make sure you have a health insurance plan that works for you. Make sure people know and appreciate the benefits you are providing. And also make sure your plan is comprehensive. Don't shortchange yourself. There are always ways to work out the details. So again, competitive benefit plan to attract and retain key employees. A stronger staff makes you a stronger team member when larger firms are looking for collaboration to pursue bigger bids. Benefits give the owners and employees a better chance to survive life's curveballs. So last thing is, you are laying, if not already, the foundation for a multi-generation company. And that's a key part of having a self-contained benefit plan and make sure people appreciate what you're trying to do. And that's the end of our combined presentations. Oh, I'm sorry. I apologize. I'm telling you, I'm working faster. Last part is navigating bid websites. Guys, the CRP team put together a bid workshop last week, 2 weeks ago. And we've looked at the local bid sites. Say, please modify or let people know what is going on, what's coming down on your bid websites, because these are the key areas you need to know. In your companies, if not you're the primary rainmaker, have multiple rainmakers in your firm. So you need to have knowledge base of all the various websites. Because when this money does start trickling down, it's going to come down through the websites. And these are all the different entities that are going to be looking for you to form collaborative relationships to pursue this new money coming down from the federal government. So again, the bid website is a key part of navigation. This is the source of everything. So why is it so important? when a certified contractor is better, more people are employed. City, state agencies meet participation requirements, and also more people are paying taxes to improve the city services. Also, schools, hospitals are going to be improved, and the more contractors become I don't like the word, multi-generation companies. And this is my last giggle break. Okay. All right. So Casey, Theodis, and I, we are available to you now. We got permission from Mountain Plains to allow you to complete a survey of our presentation. And forgive me, there's the issue with the slides, and I take full responsibility. But this gives you an opportunity to actually communicate with us along with this and schedule meetings so we can actually go into greater detail how we can be of service. And again, we are not charging a fee up front. We're charging an opportunity to learn who you are and to be of service and support you going to the next level. And Brittany, if you could drop this into the chat room, or let me just kind of show you what it looks like. Hold on a second here. And so you understand what we're talking about here. Hold on.
And if anyone has any questions, feel free to place them in the chat and I'll go ahead and ask them.
So this is our survey. And we're asking you to, first of all, contact us if we need additional information. And then here, click here to complete the survey. And what we're asking you to do is tell us,
Hey, Cynthia, if you're sharing your screen, we can't see it.
How dare you interrupt me? Thank you, Theodis. I sometimes move so fast. I do apologize. Sorry about that. Now, can you see the screen?
We can.
Okay, I do apologize. Thank you, Theodis. So let me go back one more here. I do apologize. So we're going to give the opportunity to tell us, how did you enjoy the sessions? What could be done better, more, differently? Because the more we can learn about you, the more we can be of service to you. And also down here is to let us know who you are and then arrange a meeting, with us so we can be of service to you. So we strongly encourage you to please, do the survey and get it back to us so we can actually be of service to you, because as you know, there's so many things that we don't know that can help you grow. And as Casey and those I've told you and David's presentation, the fact is that one question can lead to other questions, which can lead to us growing with you. I had an incredible meeting earlier today with one of the past presenters, and he came up with this idea saying most GCs think that working with a sub is I've run out of time. Sorry about that. So,
no, you're fine. No, we appreciate you guys so much. And of course, thank you, Cynthia, Theodis, and Casey for taking time to share this information with our MBEs. And on behalf of the NPMS DC, of course, we are so grateful for you to be able to share your knowledge. And Cynthia, I will make sure that everyone in this room gets access to that survey, because we do want to provide that opportunity to all of our MBEs. Just to give you some more insight, we do have about 10 minutes before our next workshop. And you guys will be able to go stretch your legs, go get some fruit, let your dog out if you need to, and we'll be back in 10 minutes. We'll go ahead and reset those MBE workshops and you'll be placed in your new workshop. And again, thank you so much for sharing your wealth of knowledge.